I am Gwen Mazza, and this is The Art of Transition. Welcome to the second part of a two-part series in Accounting for Your Business. Today we're meeting with Jerry Harrison. Thank you, Jerry.
Thank you, Gwen.
Jerry is a tax preparer, and again, real briefly, if you give him a scoop of your background for those who may not have seen the first series.
Started as a tax preparer, have now added financial planning, accounting work, anything related to finances into our business for both businesses and small and individuals.
And so the reason I've asked Jerry to be with us for this two-part series is she's really walking through some of the basics of starting up a new business and managing a business, and some of the tips you might need to know and some little formulas you can begin to be aware of to be successful. Because as we know, over 50% of new business or upstarts actually don't make it. And so we're going to hopefully give you some other ideas, not only a real quick review on the formulas, but also about the actual internal workings of the business today.
Okay.
So Jerry, would you mind just reviewing the financial jars you have in here and why this spending plan, which I learned in the last series, is so important for small businesses and upstarts?
So the spending plan is meant to help keep you on track. We're looking at 55% of your income going for those mandatory expenses, the rent, the building costs, the employees, the advertising, the office supplies, that kind of stuff. You need to keep within that budget to ensure that you have the money to be able to grow, which is what jar number 2 deals with, is business growth. It's setting aside that 10% in order for you to be able to be prepared for your next phase of growth, whether that's to purchase new equipment, to purchase a building, to purchase a new product line, to launch a major new product, whatever that is. So setting aside that 10% for the growth. 10% for education purposes, because if you're not learning the new technology, what's new in your field, if you're not growing yourself and your employees, eventually everybody else is going to run right past you. So you got to make sure that you're keeping up with them, and leading the pack actually is what we prefer to do.
That's correct.
Community involvement is a 5% number, and that's basically, again, it's giving back to your community to help you grow, to help them grow, and making sure that everybody's moving forward in that direction. Surprise bonuses are the extras, which is kind of your play jar. It's rewarding employees, it's rewarding yourself with those little things that make, us all want to be able to go to work and inspire us to want to do bigger and better things. Financial freedom is getting yourself prepared for retirement, whether that's moving into a second career, whether that's going and playing on the golf course, whether that's volunteer work, whatever that is. It's making sure yourself and your family are capable if you no longer want to be involved in this business or can't be for health reasons or whatever, and that's the last 10%.
So this is an opportunity for folks to get a real quick recap of what we really focused on in the last segment of this series. Today we're going to actually talk about, now that you have somewhat of a financial plan or an idea of what your percentage is and breakdown of your monies needs to look like within your organization, we're going to actually talk about the organization itself today. And Jerry spends part of her time when she's not in the tax prep and planning and getting our pieces of material out to the IRS from that January to April 15th timeframe.
October when you consider extensions.
So yes, October sometimes. She often meets with small businesses in the Binghamton area to help develop their corporations or in their company some. Some of the pieces we've talked about in the internal piece is it's important to have the internal culture and having the people in the right places as it is to making sure you've divvied your money up. Let's spend a little time talking about all those pieces that make small companies more effective.
When we look at this, in the case of this with small companies, we're talking about those companies who might have 3, 4, 5, 10 employees, and really making sure that the job description and what you're expecting them to do, that they're capable of doing, or you're giving them the tools to do so. I've discovered a world of difference as we changed our administrative assistant who was working at the front desk. Clients are more satisfied. We're getting more questions answered. Less stuff is coming into me because she's capable of dealing with that. much better, actually, I think, than I am in many cases. We use the personality profiles that Inspirit uses to figure out that that's really a good fit for her. I take another individual who has a very high rules, regulations detailed, and I can put her in that QuickBooks role or in that accounting role or filling out paperwork role. It's much suited for her, much better than somebody, she's not that people person necessarily who can smooth over a lot of that. So we all know that there's, those individuals, and we often consider them task people or people-oriented people. And if you don't have the right person in the right job, they're going to struggle with it, and you're going to struggle with their performance in that.
What's it going to cost these small companies financially?
It can cost them a huge amount in terms of lost clients and lost revenues. The bigger piece that I see is it causes a huge amount of stress as you're trying to pigeonhole them into that round hole when they're a square, and you just end up with a large amount of stress, and you end up constantly trying to figure out, how do I make this better for them? And it truly is just, it's not right or wrong. It's just not their forte. So hopefully you can shift people around and move people around. And that's not to say we all have to do things that we don't necessarily like doing.
Right.
But if that's what 90% of somebody's job is, they're not going to stay around. They're not going to be happy. So you're going to lose training dollars. You're going to lose clients. You're going to lose opportunities by shifting that person over into the right area for them.
And there used to be an old saying that the small businesses couldn't afford that. Actually, large businesses can't afford that today either.
Right.
And we just are not in a position to be able to have those kind of loss of dollars when we have other choices. What do you think gets in the way of, us as CEOs and managers and owners of letting go or transitioning that person into a different position? Why is it we get stuck in the process of making those changes?
Well, I think for some of us, it's the case of we don't want to admit that we were wrong to start with.
Oh, okay. Yeah.
I hired this person, thought she was perfectly capable, thought
Darn
she
it,
would
I'm
work
gonna make
really
it
well,
perfect.
and
Yeah.
one way or another, I'm going to make it. And especially in the small business culture, we get involved with being, we become friends with our associates, our employees. And so, the thought of having to tell them, what, this isn't working, I need to let you go, becomes very difficult to do.
Sometimes it's a family member.
Right. I have been known to say my worst employee was my son. Not because he's not a wonderful kid, he's a great kid, but he was doing something he didn't want to do, and he was going to make me very well aware of the fact that he didn't like what he was doing. And so I think it really is, as the CEO, it's really giving them the ability to say, what, this isn't working. Do I have another place for you in this organization? Or can I help you transition to some place that's more, that works better for you?
And where did he end up this summer?
He actually is working for his father's company.
Which is more in his
Which
suit.
is more, yes, and
Yes, it
absolutely loves it, and is having a wonderful time over there doing it.
And so it is okay for small companies to go through the growing pains, for our kids to come through our organizations, for them to also let us know that this isn't quite a fit, because my daughter's been very clear about that at times. She isn't in the role of a support team member. I mean, that's what she's done, but that isn't her sweet spot. Her sweet spot is really to do more of the actual one-to-one kind of connecting with individuals, whether it's on the floor doing sales in retail, or if it's maybe, who knows, someday doing even kind of some of the things we're doing right here, right now.
Right.
That will be where she'll really soar to. When you think about other things about the delegation of our work, what are some of the processes that happens for small organizations when it comes to delegating work? In the last series, you talked about trying to do everything.
Right. And trying to do everything is going to limit your growth. If you think about the fact that you can only work 12 hours or 15 hours in a day or 24 hours in a day, you are limiting your ability to growth if you're going to try and hold everything close to the vest. So if you can develop that trust in your employees to say, okay, this is what I need done, I'm not necessarily going to micromanage you in how to do it. This is what the end product needs to be. They may choose not to do it the same identical way that I would do it, but as long as they come across with the same results, whatever it is that we need out of that, that's not necessarily a bad thing, because sometimes we can figure out, oh, that person actually did it better than I could
Yes,
do
they
it.
do. And they're more pleasant sometimes than we are.
Yes. So learning to delegate those pieces off, and I think just as important is, if they do screw up, if something is wrong, it doesn't need to mean that they're never going to be capable of doing it again.
Right.
You know, they may need different training. They may need just, okay, we as CEOs see that bigger picture. They may be just seeing that little piece that's theirs, so they don't necessarily realize the ramifications that it has on somebody else somewhere in the business if it's
Right.
done this way.
Right.
So sometimes it, you know, while we tend to think, oh, they know it, they know all of that, it's that communicating that piece to them, and sometimes, you know, they'll turn around and figure it out, you know, and sometimes we're giving them too much, so you just need to give it to them in littler chunks, and now once they're through it, they're like, oh, that's how that's all done. So, you know, I think finding that push and pull, you know, in
The
terms
balance.
of, yeah, not giving them too much, but also entrusting them to, if they're allowed to grow, they're going to want to stay around. You know, I love the
Right.
fact I
Even
can,
in a small
yeah,
business.
right.
And that's sometimes what the challenge is. Well, we can't offer you anything more here. I think that's a myth.
And it's not monetary necessarily
Right.
that they want. They want that recognition. They want, you know, we often hire people in as one, and all of a sudden, okay, you're not just doing receptionist work, you're now going to do QuickBooks work, you're now going to do Excel work, you're now going to do tax work, you're going to, and giving them those opportunities. And, you know, I can see in larger organizations that moving those people up through into leadership roles, into, you know, middle manager type things, or developing a new division or whatever that is. Giving them the satisfaction in that can help keep that person in the small business, where, you know what, they might be able to go to a large organization and make twice as much money, but that's not their motivator, and that's not where their satisfaction level comes in.
Absolutely. One of the unique, I think, pieces that also happens to small business owners is that kind of being responsible. You've grown up in the business. Like I grew up in my business, and I've been doing my work for 26 years. And then the coaching piece came out midway through, you know, like 16 years ago. And then moving from just being a one person to having other people with you, I used to actually do all my own books. I used to do all my own, I mean, in the very beginning, I did my own books. It sounds so silly, doesn't it? But it's true. I did all my own books, and I did my own scheduling, and I did my own organizing of events and those kind of pieces. And I don't do that now. I really do the piece of spending a lot more time sitting in front of folks and being where my sweet spot is, which is being with the folks that I serve in person. Let's talk about when you finally make some of those choices and decisions to bring someone on board to your organization. How do you decide? What are some of the parameters a small company might want to think about when they begin to decide to bring in another person, and what kind of a person they're adding to their team? I brought in support team. I have an accountant in my business that comes in, and although Karen manages the day-to-day billing and all those pieces, I actually bring in another person to check my books, all those kinds of things that help me run the business so I don't have to think about it.
And I think that's one of the key points. One of the first things that you have to decide, is that something you want to do in-house, or is that something that you're having an outsider come in and do? Yeah, when I opened my business, my husband mowed the lawn.
Yeah.
But we then got to the point where, you know what, he's got a better use of his time, and so we hired an outsider to do that. So I think the first thing is trying to decide, do I do that in-house or do that, you know, there are people who will come in and do your bookkeeping for you. And if you only need somebody 5 or 10 hours a week in order to maintain that set of books, it's probably more cost effective for you to do so, because you're not training somebody to do it who might potentially decide to leave, or who could have have other responsibilities that are more suited to them. And that's really doing that cost analysis of, okay, if I'm doing it in-house, this is what it's going to cost me. If I'm doing it, hiring an outsider, this is what it's going to cost me in terms of that, which works better for me. In some cases, it might be a space issue. If you're doing in a situation where you're already bursting at the seams to hire one more employee, if that means having to rent bigger space or go buy a different building, it might be more important to look at that outside or look at somebody who can work at home or something like that. One of the things that people tend, what I see small business owners is they struggle with giving up that control if it's something that they don't really understand, because they're thinking somebody may take advantage of them in that case. And so having people sit with me to do accounting stuff, I really work and to educate those people, and this is why we're doing what we're doing. And you have to find that fit for somebody, whether they're in-house or out, who is going to make sure that you understand why they're doing what they're doing. That doesn't necessarily mean you have to know all the details to it, but you have to be able to trust them enough to know and understand, yes, I do believe they're doing this accurately, and I'm going to leave the details up to them.
And I'm going to go back to your profession, and that is the bookkeeping, the accounting portion of it. Most of us small business folks are not actually, that's not our forte. And it can be so exhausting and so overwhelming because taxes, getting the right amount of taxes, those groups that collect sales
All the
tax,
payroll reports,
and can you speak a little bit to that in terms of cost and benefit? Because I do know there's not a day that goes by or a year that goes by that I am not grateful for my accountants and my bookkeeping people, because I can push the button. I am now set in a world that I can push a button at the end of the year, my taxes just go boop, and that's it. That wasn't always the case for me.
And it's not always the case, right? Even right now for many small business owners, because you hear about that coming in with a shoebox full of receipts. Well, if you're walking into your accountant's office with a shoebox full of receipts, how do you have any clue where your business income has been throughout the year? How do you have any idea what your tax liability is going to be? How do you know you've met any of those requirements? And their successful businesses look at the statistics of their type of business. What is our type of business looking at in terms of an advertising budget, in terms of office expenses, in terms of salaries and all of that stuff? That's where an accountant can be invaluable in that. You don't necessarily want to hire that accountant who's going to sit there and input your checks for you and pay your bills for you. Because it's not a cost-effective use, but going to somebody once a year and just throwing your receipts at them and saying, produce, you may be missing receipts, you may be missing expenses, and if they're not familiar with your particular business, you find yourself in a situation of paying more taxes than you need to. Reviewing those financial statements with somebody in the accounting profession, depending upon the size of your business and what you're doing, at least twice a year, more likely quarterly, and for some businesses even monthly, if not more often. You really need to be doing that. And that could be as simple as sending them your QuickBooks file, and the accountant looks at it, and it's an hour's worth of work. And but it can
for you folks.
Right.
It's an hour's worth of work for you folks, or a couple hours for you folks.
Right.
It truly was hours of work for me.
Yes.
Years ago when I was trying to do some of my own pieces, and it's painful at moments. We just put it that way. It can be really painful and exciting, but painful at times.
Well, and think how much better will you feel if you're not looking at that IRS envelope that you got in the mail, because so many people see that, and you can just see that fear.
And that's one of the things that happens particularly for small business. There's a couple of fears that go, and that is, one, if I come to see you, or I have my accountant or bookkeeper stop in once every 3 months, do it on a quarterly basis. I don't want to maybe necessarily want them to know what I don't know, and yet it's so important that we're honest with the individuals who help us do that, because I can't get more education information if I don't share with you. Oh, I don't understand what a P&L is. I don't understand what the aging report does. I don't understand what all these different pieces look like, and what would you say to folks who are in that small business that may be a little reluctant to say, oh, sounds good, go ahead, and, as opposed to, I really don't know.
And that truly is really coming in and you know what, those first couple of conversations might be uncomfortable and might be, we all are in businesses that we tend to throw around acronyms,
Right,
And
right.
so it's stopping and forcing that accountant to, to say, when I throw, you said P&L. A
Yeah.
lot of people are like, well, what the heck is that? Because it's called a profit and loss statement, it's called an income statement, it's
Right.
called any number of different things. And to look at one and see what should be on one, it really takes some time and effort to analyze. And having your accountant, I don't necessarily expect my business clients to know that, for a service type business, your advertising budget should typically be 8 to 10% of your revenue. But I can very quickly look at a profit and loss statement and say, oh, you realize that you spent 30% of your income on advertising. How are you going to be able to do this, this, and this?
Right.
And it just needs to be that conversation. It's no different than you sitting down, if you're in the construction business, sitting down and giving somebody an estimate. They're not going to understand all the ins and outs and the behinds, but they're going to ask enough questions to make sure that you're doing what you want them to do.
So be okay not knowing. Come on in and let's talk about that.
Right.
One of the greatest pieces I believe, and this came from my husband and told me years ago to do this, and yes, I finally did that, thank you very much, honey, is I actually had our accounting agency come in and set up our QuickBooks program so that it absolutely matched. I feel so excited now. I know that sounds silly, but I'm so excited. It matched everything it needed to be in the forms that we use at the end of the year. And I have to tell you, it is heavenly. It is just absolutely
It's heavenly from our side, too.
Is it? Okay. And I was so resistant to it. I was like, I know what I'm doing, or I think I know what I'm doing. And I mean, I've worked with different accounting groups, so most of my accounting groups tolerated me, I'm sure, as I've gone through the years. I've only had actually like 2 or 3 groups that I've worked with in my 26-year career. But this group came in and I was finally open to, I wish I had done that years earlier, I guess is what I'm saying. Wish I'd gotten out of my own way and just had somebody come in and set it up the way it needed to be set up from the very beginning. So anybody out there doing a small business, have them start right from the beginning, invest
I
the
love
money
to
to do
create
that.
the QuickBooks files for my clients and set up the accounts for them, the chart of accounts, make
Right.
sure that all of their sales tax numbers are in there and their
Right,
payroll numbers and
right.
all that stuff is in there, because it saves a tremendous amount of time and frustration on our side. I don't like going back in and having to I spent 6 hours the other day correcting errors that somebody had made in their 2009 and 2010 before I could even begin looking at their 2011 numbers. That's not fun for us. We're not trying to generate fees. We're just we have to have a good set of numbers to start with to move forward with. So we actually love the people who are in our office more often and want to learn and want to figure it out. That's the people that we'd rather work with than the guy that shows up once a year and throws it at us and then hollers when we hand him a nice, robust bill because we had to straighten out his files.
So take the time to invest working in your business and on your business. And one of the ways you can do that is to really have this great accounting kind of process in place, having the right people in place, knowing when you're not the one. And in this case, even though I love numbers and I love finances, to do the actual accounting piece, it just is much sweeter over when
We
the other
should
group?
probably mention there's a difference between tax preparers and
Right.
accountants.
Right. So talk about that a little
You
bit.
know, because there's an awful lot of small business owners who are simply using tax preparers. And they're not the ones that can give you a lot of that consulting advice. They're not the ones who can look at a financial statement and know that it's right or wrong. They're simply taking the numbers that you give them and putting them onto a tax return. And if you don't know if the numbers you're giving them are right, you can end up in some serious trouble with IRS New York State if you do pull an audit later on, only to find out that numbers are not accurate because nobody asked the questions behind.
So it's important to interview to understand what each person's sweet spot is. If there's a tax preparer, they may have an accounting background, but that may not necessarily be the case.
Right.
So I thank you because that actually clears up more of those pieces. And they may be an accountant. They also may not want to do tax prep, though.
Right.
Is that correct? So really interview for that spot that you're looking at. One of the bigger pieces we also talked about, well, there's two things. One is I want to just chat a little bit. At dinner the other day, we had an opportunity to talk about that there's this really cool thing that folks who do QuickBooks for us can do for us small business owners, and I just found this out. And I found out that they can actually lock us out of last year's, so we can't go in and make a mistake by hitting a button by accident. Can you talk a little bit about that? I found that absolutely like, oh, that's very lovely.
That actually goes back to what I just said about correcting that particular gentleman's file. He was a new client for us, so we had not had the opportunity to do that in the past. Well, he had gone through and voided some checks that had never been cashed back in 2009, 2010. He had, deleted a couple of people who had never paid, that kind of stuff. So I'm looking at his 1/1/2011 numbers and saying, wait, these don't match anywhere near the numbers that were reflected on the last tax return.
Right.
So in QuickBooks, you can go in and you can set a password with a closing date. So basically what's going to happen as soon as I finish his 2011, his closing date is going to be 12/31/2011, and he will not be able to affect anything prior to that.
Right.
You put in a password. So if there's truly something that you have to do because you figure out there was a mistake made or whatnot, you can go in. Well, we do that password lock, but we don't tell the clients the password. And so if they're trying to do something like that, it'll pop up a note that says you don't have access to that. They'll call us and we'll say, well, what are you trying to do? And we're like, no, you can't do that because that's going to goof these numbers all up and whatnot. So
by the way, I found out the password last
and
night.
I'm not saying that password because
good for you. That's very funny, though. As an owner, though, and I do know I've hit that delete button on some of those times, and I'm just going, oh my gosh, what have I just done? And what I'm learning is that that's how some of those other mistakes can happen. So thank you.
they're not intentional. It's not that you're trying. But you just don't understand the ramifications all the way through.
Sometimes I don't understand how to use the computer.
Yeah.
Let's put it real simple. Let's put it real simple. What I'd like to do is I'd like to take this moment to recap and thank you so very much for not only accounting for the financial part of the business, but also some of the internal workings of the business, understand how we can have folks in the right spot in small businesses really work for us. I want to thank Jerry and her whole team for all their great knowledge and wisdom that they continue to share. I want to thank all the tax preparers and accountants out there who do for me what is not my sweet spot, and I do thank you more than you have any idea. If you would like to spend a little time speaking with Jerry, feel free to contact her through my website. You can reach her and I'll connect you directly to her. Again, she is the Ever Revolving Enterprises down in the Binghamton area. Thank you for showing up and coming to be with me today, and for the lot of laughter, and thank you for the tip around the passcode. Until we see you next time, have a great day.